Okay guys, so I wanted to just take a quick break from the screen recordings. I know there's a lot of information to take in this last section. Hopefully you've written a lot of notes down. Hopefully it will make sense to you. If it doesn't, I do recommend that you just go through the videos that don't quite make sense again, just make a few more notes. In this chapter, we've covered quite a lot of technical analysis from a basic side of things. Now you're probably thinking it's absolutely not basic. And it certainly does take some time to take all this information on board and actually start noticing patterns and noticing, candlestick patterns and bullish engulfings and things like this. So it's absolutely fine. It is a learning curve. It will take you some time. But as me and Yasser have said already, just like anything, if you want to get a promotion at work, you have to work hard, you have to go over and above, put that time in, put that time on the charts, okay, so dedicate maybe just an hour a night and just start looking at charts, okay, going back in history perhaps, and identifying these patterns where things are broken or where a market might reject, say, a support or resistance zone. The key thing to take away from all of this information in this section is the fact that we want to make sure that we put it all in synchronization. Now, there's two aspects to this, okay? So number one is if we're going long on a trade, let's say we've got GBP USD and we've seen a bullish engulfing candle, okay? We want to make sure that we've got more than just one thing, one bullish engulfing candle, one thing that makes us believe that we're going to go higher or lower, okay? So, for example, we've spoken about support and resistance, okay? We've spoken about EMAs, we've spoken about Japanese candlesticks, we've spoken about ATRs, okay? We've spoken about every aspect of the technical analysis section so far, that we need to put them all in synchronization. So we need to find that bullish engulfing candle, but we need to find it at a support level, an area where perhaps the EMAs have just crossed, and it's also perhaps at the bottom of a trend line and therefore should bounce from the bottom of that trend line. So it's all about synchronization from the respect of using these different technical indicators to amalgamate and make a decision together alongside all of the other indicators that we're using. But at the same time, we're also talking about timeframes. Okay, so in terms of timeframes, there is no point going long on a trade if we look at the monthly time frame and we see a massive bearish signal. If the monthly time frame is showing us a bearish signal, then we don't want to be going long of that market. And if we do, we definitely don't want to be long for more than, say, 50 or 100 pips, depending on the market, depending again on what we talked about, the ATRs. So, average true range, sorry. So, this is the key part of the technical analysis section, is just remembering that they are all important on their own, but they're so crucial to kind of tie together and synchronize. So, from the respect of putting EMAs, support and resistance, and the candlesticks together, and at the same time making sure that the time frames line up, and we're not going against perhaps the monthly or weekly time frame. Think of it from a data perspective. If we're looking at candles on a daily chart, then there is only a day's worth of data on that. And whilst that's still a good solid amount of data, especially when we talked about the market is $5 trillion a day, think how much data is in the weekly or the monthly candle. Okay, so the more data you have, the more accuracy you're going to have in terms of the signal. So if you see a bullish engulfing pattern and you see it on the hourly time frame, okay, compared to if you see it on the monthly time frame, the monthly time frame is going to be so much stronger and so much more accurate because there's so much more data. There's a month's worth of buyers pushing that market up, and that's given us that signal. Whereas on the hour, we've only got an hourly, an hour's worth of data, an hour's worth of buyings. Okay, so just take that into consideration moving forward. Use every single thing that we've talked about. Start going backwards through some charts, do some analysis, try and locate the support and resistance levels, and you'll have a lot more success moving forward. So I hope that will make sense. The next section, what we will be jumping into, is some advanced technical analysis. Now, I know you're probably thinking the previous section was quite advanced. Now, there is a lot to technical analysis. Again, it is a key part of trading. We need to understand it completely from scratch. What's happening on these charts, what to look for, what to identify, and what tells us when to buy and sell. Okay, so the next chapter we'll talk about a few other aspects such as advanced EMAs, so how we can use those EMAs to create entry points. Okay, and then we're also going to cover a few different sections as well, such as ranges, And yeah, so we'll see you in the next chapter for that. Again, hope it all makes sense. And the key part to take away from this lesson right now is just to ensure that we put everything together. We don't just focus on candlesticks and think we're gonna make it in the market. Okay, we need to focus on it all. We need candlesticks. We need support and resistance. We need to take into account the ATR. We need to take into account the trend lines. Okay, the EMAs. Everything has to be used in synchronization. And basically, it's no different to betting in terms of putting the odds in your favor. Okay, if you're betting on football, just as an example, if you're betting on football and you're betting that Arsenal are going to beat Manchester United, and you see historically that actually the last 10 times that they played, Man United won nine of those games out of 10. You know, the odds aren't in your favor. Okay, so this is all about putting the odds in your favor, and therefore you will have a lot more success in the markets. So